Hey there, Steve Rubin with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to give some key observations from earnings this week. And there's 5 key items that public company executives can learn from. The first is earnings is all about forward guidance. Management teams overlook the fact that good guidance and successful financial expectations management is the most powerful valuation driver at their fingertips. And conversely, management teams spend way too much time trumpeting past performance when it's no longer a driver of valuation. Number 2, lowered guidance. Slowing sales growth offset by higher margins is not going to save your stock. You needed to be ahead of those sales trends sooner, and you needed to be more disciplined about your spend as well. Number 3, save long-term guidance for an analyst day. There's 2 issues here, credibility and nuance. You don't want to be the company that gives long-term guidance in a paragraph and then 3 quarters later changes that long-term guidance because you weren't able to give thoughtful or the right time on the nuance behind that long-term guidance. Number 4 is customer spending. You always have to be careful and thoughtful about how you describe changes in customer trends and customer spending, because depending on what you say, it's going to impact the entire industry. And this happened based on Palo Alto Networks' narrative infecting Zscaler. Zscaler had an incredible quarter. They raised their guidance significantly, but the stock was still down $40 on earnings. So the 5th is this idea of sales cycles. The easiest way to destroy valuation and put your stock in the gutter is to talk about lengthening sales cycles. Investors don't buy it. They see right through it because the key here is, again, Hall of Fame management teams need to understand that there's a balance between taking any business and waiting for surge pricing, and that they have to execute on that balance, and that they're not allowed to take a quarter off from being a public company. Hope you enjoyed these key takeaways. Thanks for watching. Always here to help with your capital markets, investor relations, and corporate finance needs.